Hi, welcome everybody to this very special Baker Street property meet. It is an emergency property investors summit so that we can shed some light on some of the issues that are thrown up amidst this COVID-19 pandemic. I'm pleased to say that we have now 535 people online at the moment joining us, and many more people are going to see this on replay afterwards. This is two firsts, really. It's the largest Baker Street property meet event we've held. The previous largest was about 375 people. So we have 535 people now, 552 now, actually. And also the first Baker Street property meet where all the speakers can do the entire meet wearing no trousers at all. So that's another little bonus for you. So we're going to get going. I mean, I've been investing in property for 30 years now. And I tell you something, these are unprecedented times. I know you've heard this phrase used quite a lot, but they truly are. I started in 1990. We've had recessions, we've had dips in the housing market and stuff like this, but never a wartime style shutdown of the whole economy. The trick here is going to be to figure out exactly what's going on, not get too despondent, to shore up your existing businesses and cash flow, to steady the ship, if you like. And then when you've got a steady ship, be first off the block in terms of spotting and exploiting the many opportunities that are going to be abound over the coming months. It's too early, really, to talk about those opportunities. We'll give a glimmer of light as to where they're going to be. But tonight is really about what's the immediate impact for you as a property investor that you need to deal with in the immediate aftermath of this COVID-19 crisis. So I'm very lucky to be joined by a fantastic panel. Let me just get my share screen on, and now you can see my slides, can't you? Can you see those slides okay? So I'm not only joined by my four experts, John Howard, David Sandeman, Andrew Roberts. I'm also joined in the studio here by Connor Gavin, who is behind the scenes doing all the tech. And I can confirm that all of us participants tonight are the minimum 2 meters apart. If you're new to this channel, make sure you subscribe. Hit that subscribe button and hit the bell icon, because we put out new content each and every week. It's all about keeping you informed and educated. And during this COVID-19 crisis, we're putting out regular pieces of content for you. What have we got? What have they got on screen? Have they got my slides or me talking? Okay. We're putting out regular pieces of bulletins under property breaking news. As the news develops, I'm putting out a video to kind of translate that into specifically what it means for property investors. We've put out videos on the buy-to-let mortgage holiday, how to sort of avail of that, how it affects HMO landlords. I put out a video today reviewing 12 different mortgage lenders as to how easy it is to get on the phone to them and actually claim your mortgage holiday. So that's all to come. Our next event will, of course, be online. We're going to be online probably for the next few months like this. So next event will be 29th of April, and it will be online too. I must say, we've got 703 people so far on this YouTube stream. So thank you all for joining us. Do keep your questions coming in the chat. There are plenty of people asking all sorts of questions. Right, if you just go back to me, I'll just introduce people to the lineup that we have. Okay, so or maybe put the Oh, if I have to stop sharing my screen, don't I? And then you can show all the other speakers. Okay, let me give you a quick guide, if you like, to our resident experts tonight. We have John Howard. John Howard is a very accomplished property developer. He does a lot of other things to boot. He runs an estate agency chain. He has been, refurbishing, flipping properties. You may have seen him on Property TV. I do a TV show with him, actually. It's Property Angels, which is a bit like Dragon's Den, where people come to us to pitch their deals. You'll see John Howard on there. Tonight, he'll be sharing with you how the COVID-19 crisis is impacting the world of property development and property developers. If you've got any questions that you think of during his talk, do put them in the YouTube chat, and we'll be covering them after the break. Next up, we have David Sandeman. David Sandeman runs an organization called EI Group, Essential Information Group. Now, ever since auctions began, I guess, pretty much from the late 80s onwards, his company has been collating data from practically, well, not practically, every single property auction going. He's regularly asked to comment in the press and media on what's happening in the property auction scene. And just over the last week, we have seen a seismic change in how property auctions are being done. He's going to give his views on that. A lot of them have gone online. Is that something that's going to be permanent? How have the auctions fared this week? We've got some commercial property auctions next week. How are property auctions actually going to unfold, if you like, during this crisis? David Sandman will shed some light there. And also Andrew Roberts. I mean, all these speakers are fantastic. They're all good friends. They're all experts in many more things than I've asked them to comment on here. So when we get to the panel discussion, you'll get a lot out of the four people that we've got here. Andrew Roberts runs a great property meet, very, very savvy, switched on investor in all sorts of property from residential to commercial. But what he's going to be sharing with us tonight is distilling some of the announcements, if you like, that the government have made, and share with you how those impact you as residential property investors and landlords. And finally, myself, I'll be talking about what's been happening in the commercial property space. There's been a lot of change there. And the announcements that have come about in the last couple of days will shock some, but are going to create a huge amount of opportunities for many coming down the road. And I'll kind of share with you what those announcements have been, how they impact commercial property investors and developers, and shed some light into the opportunities that will unfold in the coming months. So quite a lot there, we've got 799 people on here now. If one person just come on to make it 800, that would be so lovely. But okay, so what we are going to do now is we are going to get straight into it, and our first. What have you got? Have you got you've got the Zoom on screen now, yeah? Or you can have, because I'm going to bring John in now. Is that okay? Brilliant. Okay, so without further ado, I normally, when guests come on, I normally ask you to give a big round of applause. So if you're sitting at home, I want you to do that, actually. I've got John Howard. John Howard I love John Howard, very plain talking, tells it as it is. He won't take any BS from anyone, and he really tells it as it is. And he is a true expert. He's done a huge amount in property, much more than the scope of stuff that I've asked him to comment on tonight. He's a developer. He has developed sizable projects. He's just completed one, so he's well in the thick of all the problems that face property developers. John Howard. Please give John a big round of applause. Yay! John, is he muted? Have I muted the wrong chap? Oh, sorry. John, can you hear me?
I can hear you. Can you hear me?
Perfectly, perfectly. Can everyone see John? Do people like his shirt? No comments yet on John's shirt. Okay, John, listen. It's over to you. Tell us, how is this all affecting?
Well, the good news is, Ranjan, the horses are fed. They're all gone to bed, so they won't be listening to me. But hopefully there's 800 odd people, which is amazing. And Ranjan, first of all, can I say what a great job you've done organising this. It's not easy. And if you ever all goes wrong for you in the property world, there's definitely a job for you at Radio 2, I'm sure. So well done, well done. Now, property developers and developing. I want to break it down into 4 parts tonight, please. 4 parts. But before I do that, I just want to talk about where we are. I've spoken to a lot of professionals, and I mean experienced people who I respect over the last couple of weeks. These people, they're not young negotiators who have just received their first company car. These are professional people who have been in the business a long time. So that is really important. And what they're saying to me, and I tend to agree with them, that one, it's too early to say where we are. Secondly, there is a pent-up demand and enthusiasm, as long as this doesn't go on for too long, that people will want to get out there and buy domestic properties. I'm not talking about commercial. Ranjan is the expert on that, but I'm talking about the residential properties, as long as this doesn't go on too long. If it goes on too long, goodness knows where we'll be. However, so four parts to this, really. One is, if you haven't purchased the site yet, should you be doing? The second is, if you've purchased it, should you start it? The third is, if you're halfway through the development, should you carry on? And the fourth is, where I am at the moment, is I've got 2 developments which are finished. What do I do? So let's start off with the sites that haven't been purchased yet, that you're thinking of purchasing. You've agreed the price probably. At the moment, obviously, I wouldn't catch a falling knife. So if you've agreed to buy a site, unless it's seriously cheap, I would just hang on. I wouldn't be going back at this stage and renegotiating. I'd hold on to the contract, see how the next few weeks pan out, and decide where you want to go with it. Clearly, there's lots of different ways of skinning a cat. You can always go to them, reduce the price, but give them a share of the profit, or just reduce the price. There's lots of things you can do. But the answer is to be talking to those vendors you're buying off in a little while. It's a bit too soon to do that. And obviously make sure that your bank are still going to lend you the money. The second, and probably not the most difficult situation, but if you've bought a site, should you start? Again, for me, if I've got a site that I haven't started yet, I'd keep my powder dry, I'd keep my cash in the pocket and see where the next few weeks are going to go. There's no point rushing to start, apart from the fact I don't think the government want you to start either, because I think they want everyone to stay at home. So you've got a bit of an excuse there for not starting. If you've already signed a building contract, you need to negotiate that with the builder. The third thing is, should you complete a project? Now, if you don't complete the project, you're going to get people like me all over you trying to buy it off you cheap. And I'm not sure you want to do that. So if you've started it and you've got the money to finish it, and it's not going to put you in any financial difficulties, then finish it. Because you finish it, you've got a couple of options. You can rent some out, you can keep some, you can try and sell them. While you are halfway through, you're in an incredibly vulnerable position. It's probably less than what you started with almost at the moment. So if you can finish it, finish it. Now, and this is where I am, the next one. If you've got projects that are finished, what do you do? The first thing is, don't panic. Speak to your bank. Get your 3 months interest-free holiday. Hopefully they'll be sensible about that. Now, the government have spoken to all these banks. So if your bank says to you, oh, we haven't heard from the government, that's rubbish. They have heard from the government, and the government has said, look, give them all a bit of a break here. So hopefully they will do that. Now, if you have got a scheme, a Help to Buy scheme, the government, wonderful Help to Buy scheme the government have done for everyone. If you've got that, do not rent your properties out at the moment, because if you do, you will not qualify for the Help to Buy scheme. Now, we're talking to the government at the moment and Homes England to try and change that. But at the moment, if you rent your property out and you're under the Help to Buy scheme, you no longer qualify for it. So please don't do that. If you are going to rent out, my suggestion is be aggressive about it. Offer them half rent in the second month. So get your first month's rent in, offer them a half rent in the second to get it let. Be aggressive, be ahead of everyone else if you're going to do that. Be positive and get on with it. Don't put them all to rent. Leave some ready to sell when things improve and when people can actually view the damn properties. There's no reason at the moment to think that if you've got a finished product that's very nice, that in 3 months' time you won't be able to sell it. As long as people have jobs. So that is so important. The other thing to remember at the moment is valuers. If you're got a buyer and they're lending less than 60%, that valuation can be done by desktop valuation. So the valuer does not need to go out. If it's over 60%, they're not going out, and your buyers will not get their mortgage offer. So it's really, really important to remember that. Don't panic, keep calm, see where we are in 3 or 4 weeks' time. All these things, we're in a unique situation. We've never had a market stop so quickly, but the government are there to support you and support the buyers as well. And I think when we come back, they might even drop stamp duty, they might do all sorts of things. VAT might go down. Who knows what's going to happen at the moment? So keep calm, be professional, get out there and talk to everyone you need to talk to, especially the banks, and make sure that you survive the first 3 months, and then let's relook at it again. Ranjan, over to you.
Am I back now? Thanks very
Yeah,
much,
you're
David.
back now.
That was absolutely fantastic and very insightful. Just a quick question for you, John.
Yes.
Now, the government have given all sorts of help for buy-to-let mortgage holders in terms of getting a 3-month payment holiday.
Yes.
A gaping hole seems to be developers, because developers will have development finance, bridging finance on expensive terms, and some of those lenders' business models are predicated on failure. And if the construction industry has to stop work, that's going to be a very, very interesting situation. Do you have any, can you shed any light on that?
Well, all the banks have been spoken to by the government, and I can't believe that the banks won't be sensible and negotiate. At the end of the day, what you've got to remember is they do not want there to be a problem either, on the whole, because if they're geared at 70%, you're geared at 70%, and you're halfway through a project, you know, they could end up losing some of their capital as well. They don't want to do that. And no one is going to push anyone at this stage into that situation. It's far too early. That situation comes, Ranjan, after 6 to 9 months, in my experience. It doesn't come straight away. And by the way, neither do the deals. Yeah, you might nick the odd thing in auction, but apart from that, it will be a fairly, you know, it takes time to wash through the system. The receivers get hold of it. Then you can have a deal with the receivers. Who else is going to sell in this market? They're all going to think that it's going to come back and everything's going to be okay in a few months' time. So they're not going to sell unless they're really, really desperate to. And of course, the people who are really desperate normally can't afford to sell because they owe too much money to the bank anyway.
That's a very good point. Very good point. Listen, John, fantastic.
Thank you.
You folks out there on YouTube, show John your appreciation. Any comments that you have, leave them on the chat window to tell John what a great job he's done. Fantastic insight. This is what I love about Baker Street. I haven't got a clue what's going on. Just invite a bunch of knowledgeable people and ask them all the questions that I have on my mind. The next person I want to bring in to give us the insights that he has is none other than David Sandeman. David, are you there?
Hi, Ranjan. Good to see you.
Whereabouts in the country are you, David?
In Blessing, little village near Red Hill in Surrey, just north of Gatwick.
So at least we've definitely got 2 meters distance between us.
Indeed we have. Indeed we have.
Now, I love property auctions. I buy probably half of all the stock that I pick up is from property auctions. So what's going on in property auctions and the outlook, given the COVID-19 crisis, is of very much importance and relevance to me. So David, over to you. Tell us what's going on.
Well, I think if I go back 35 years when I sort of bought my first property at auction, and the 30 years we've been running Essential Information Group, we've seen 3 sort of property crashes where values went down quite a lot. One, Brexit, which just froze the market. And the last 2 years has been dreadful. Nothing's been happening. Every newsletter we've sent out, we do a monthly newsletter, the number of properties selling and amount raised has been dropping compared with previous periods. But it was with great delight that just a week ago I sent out, I'm sure you got a copy of my February newsletter. And for the first time, the 36 metrics we measure the business by, over half of them were an improvement in lots offered, amount raised, and percent sold. So that was really good. And then all of a sudden, I would say I can almost put it to the day, 2 Fridays ago, a major auctioneer said, we cannot hold a room auction. And then there was a huge flight where everybody said, we're not holding room auctions. And because we have an online platform, which we provide for a lot of auctioneers, we've had over 100 different auctioneers, from the biggest Allsop down to small auctioneers offering 1 or 2 lots, come and say, David, can we have an online auction platform? So the first change for the industry because of all this is that there are now no longer any more room auctions for the foreseeable future, but they're all going online. And some are, as you might have seen, Auction House London had a great sale yesterday. Savills were on today, where there was an auctioneer sitting in a room at a rostrum or standing up with a gavel and getting bids by telephone, internet, coming in. Savills had a lot today. I think there were something like 36 registered bidders. A property in Essex guided at 260,000 and sold for 660. Really competitive bidding. But nobody's holding room auctions, so they're all going online, and a lot of them are using eBay style. So we've just making live at the moment. Allsop, nearly 400 lots across the commercial and residential is going to be sold, purely online. Barnum Markers, Network, a lot of other auctioneers, no room, all online. But the problem is that when this tranche of auctions has gone through and run its course, and we got auctions booked up till maybe the end of August, or end of April, I think we're going to see a period when it's very, very quiet, because like estate agents, the auctioneers aren't going to be able to get out to inspect the properties. And if they did inspect the properties, then the buyers aren't going to be able to get out to view them and inspect them for the reasons that we're all only too well aware of. So I think for the next few months, it's going to be quiet. But, and this is a big but, when we are through the other side of the COVID-19, we will find that there'll be a huge amount of pent-up demand for auctioneers, and some will return to the room. I've been talking to one auctioneer who up until 2 weeks ago thought online auctions wouldn't work. He's just sold 90% of his stock today online with fantastic prices. He said he's never going back in the room. We'll see a lot more auctions coming on, more capacity, and I think they'll be full of stock and lots of good deals to be had as people just want to get shot of what they've got. So I think when we're out, maybe, I don't know, June, July, August, September, whenever, but hopefully it'll be this year, there will be some fantastic opportunities for you to take advantage on. And that we will see that the online auctions is going to increase the frequency of auctions and the volume that they can go through. And of course, all the lots you'll find on our site, as Ranjan said earlier. So really, that's my outlook for the future. Tough few months, but when we get back, it'll be business as usual and lots of it.
David, do you think it would be business as usual in terms of people happy to come back to an auction room, or will it just go online permanently?
The jury's out. You've got big players like Allsop and Barnum Marcus and Savills who love the room and they do it extremely professionally and very, very well, and Auction House. And now they're all being forced to go behind either closed doors or do it purely online. I think let's see what happens. I'd have a better idea after this auction, because a room auction is an expensive thing to put on in terms of printing catalogues. One expects to have the room hire, it's £20,000 for some of the larger auctions just to rent the room. And of course, they have to put the room date years in advance. With an online auction, if they've got 10 lots, they could hold an auction every month, every fortnight. So people like Auction House London, Auction House UK, Landwood, and some other companies are holding a weekly auction. So if you want to put a property to auction, the next auction is only 4 days away.
And the other question I have is that a couple of the auctions this week have all been residential. Next week, we've got some commercial property auctions. I'm going to be talking about commercial property later, but is there going to be a market for commercial property at auction when the commercial properties themselves are shut and some of these tenants are not paying rent? What do you think it's going to be like?
That's a very good point. And the vast majority, the biggest sector of the commercial market that auctions sell is retail. And, ITU put a note out to say that only 29% of the rents were paid on time 2 days ago. And it's going to be even more down to the covenant strength and the security of the lease. So, yeah, I think people will be analysing very closely what happens on Wednesday with, with their 160 lots.
Yes, I'll be talking a little bit about the commercial property side as well. Listen, David, thanks very much. That's been truly insightful. You guys on YouTube, let us know in the chat window what you think of David's insight. Give him your praise and give him your thanks. We have just hit 1,000 people on this live stream. That is officially the largest Baker Street that we have done. That's not bad. You guys,
well done. Congratulations.
And all with no trousers, folks, isn't it? It's what a wonderful, what a wonderful broadcast this is. Right. Okay. So let me just grab the thing here. So now, what have we got next then? Well, before, as I mentioned to you guys, we've got residential property, commercial property coming up, and then at 8 o'clock we're going to take a small break. We are going to join with the nation really on celebrating and applauding our NHS frontline workers for all the good work they're doing in combating this goddamn virus, so that we can get back on with our lives again. So we'll break at 8 o'clock. For that. Okay, so what have we got next? Well, we have my good friend. They're all these people here. They're all great people. They're all good friends and everything like that. We've got Andrew Roberts. Andrew, can you see Andrew on screen? Can I see? Andrew, I think you're unmuted. Andrew Roberts does quite a lot in property. He runs the Great Property Meet. Got residential property, commercial property. He's doing some of the commercial mixed-use stuff that I talk about as well. He's a former management accountant, years of corporate experience, years of experience in analysing data and analysing deals. A very savvy, very shrewd property investor who knows how to sniff out a deal and crunch through the numbers. I know that Andrew's very excited about the opportunities that will come in the coming months. But what I've asked him to share with you guys all is how this COVID-19 crisis impacts you as a residential landlord, as a buy-to-let investor. Andrew, good evening.
Good evening. How are you? I'm just checking. Can you actually see my screen share there?
I can see the
presentation.
I can see you. Can you see? Can we get Andrew on screen?
Let me screen share there then.
Let's see you first before we see the screen.
Okay, see me first. Let me just stop this share.
Because Andrew is out of this world in more than just his background image. He's probably done the best thing to escape the virus, which is to get into a shuttlecraft and blast himself into orbit. So he won't be catching COVID-19 anytime soon. He's also the show-off of the four of us because he has the best slides of anybody. Andrew from Rugby, how are you doing?
I'm very well, Ranjan. Thank you very much for that phenomenal introduction, and congratulations on attracting over 1,000 people to this live YouTube, I think it must be David and John, because it's
Well,
certainly
no,
not
no.
me.
When I said Andrew was on the ticket, I think they've all come for yourself and your lovely smile there. Andrew, enough of me being a Radio 2 DJ and prattling on. Over to you with your insights for buy-to-let.
Thank you very much. What I shall do, I'll just share my screen here with the audience, and away we go. So what we're going to do is look at the impacts and age limitations that you make in the residential property sector. Now, I'm also going to share with you some cash flow protecting tips. So without further ado, the 4 areas are unincorporated landlords, incorporated, and rent-to-rent as a sector. Looking at the self-employed, on 18th March, the Housing Secretary Robert Jenrick announced emergency legislation to suspend all new evictions as part of a national emergency. There is also to be no new possession proceeding in place. And to compensate for that, you have landlords protected by a 3-month payment deferral. So let's take a look at the buy-to-let mortgage situation. Landlords have been granted what has been termed holiday, but is actually a deferral of mortgage payment interest. It will continue to accrue and will compound if you do not clear it. The landlord may be asked to prove that they're no longer in need of rent from tenants, and payments must be made, including future interest. Looking at the latest news for self-employed, we have the Chancellor Rishi Sunak, who's March the 24th. It's incredibly complicated in a system to support the self-employed. That encompasses landlords and zero hours contract tenants. Only 3 years ago, the Chancellor announced self-employed would receive support to £2,500 in monthly payments and can continue to trade, which is quite unusual. So we can continue to trade. However, it made no specific to landlords in that. Let's have a look what happens if you have a commercial mortgage. Mortgages which are based on your rental income rather than the asset value. So those would be more typical from HMO property or for a portfolio loan. Currently under the legislation, do not qualify for payment deferrals guidelines. However, some lenders are offering a deferral program. Some lenders are considering it, and some lenders have declined to consider. Now, I know Ranjan put out a video this afternoon, and you might watch that, and I'll go with some information at the end as well. So how does it differ for incorporated landlords? Well, limited companies are investment companies. It's understood that they would not qualify business interruption loans that the government have announced because they are non-trading. And in theory, they also do not employ staff. However, if you've got standard buy-to-let mortgage products, they will qualify for a 3-month payment deferral if requested from the lender. Now, an interesting statement which I picked out from the MP Jenrick was the government is clear. No renter who has lost income due to coronavirus will be forced out of their home. Nor will any landlord face unmanageable debts. Notice the word unmanageable debts slipped into that sentence. So let's have a look at the mortgage payments. From what I can ascertain so far, you need to be able to demonstrate your tenant is unable to make rent payments. Your letting agent has been unable to find you a tenant, or your agreement to let has fallen through because of COVID-19. Now, we take a look at letting agent companies and rent-to-rent operators. Under a limited company structure, all companies will be reimbursed 80% of furloughed employees' wages, capped at £2,500 per month. it's not clear to the Chancellor's announcement today whether directors, shareholder owners of managed companies can put themselves onto furlough or how it affects 0 hours workers. However, you will be entitled to full reimbursement of statutory sick pay at the grand rate of £94.25 per week. So let's have a bit more of a detailed look at the eviction side. The official government statement was emergency legislation to suspend evictions. There is a word there, which is the official government. What does it actually mean? The coronavirus bill is going to amend the time limit that a Section 21 notice must provide from 2 months to 3 months, with the ability for the government to change that and extend it to 6 months should they require. And this will continue in place until the 30th of September 2020. It may be extended, it may be withdrawn early, but that is current situation. Rent to rent is an incredibly popular strategy. So the issues here facing both the operators and the landlords who own the properties are not too dissimilar. And the options facing them are very limited. So what happens if the tenant cannot pay the operator and the operator can no longer afford to pay the landlord? Well, what is we're all in this together. So let's see what solutions there are. If the operator can no longer make payments, the landlord has several options open to him. Annul the contract and enact Section 3 of the 1985 Housing Act, transfer the interest of the tenancies to his name. But in theory, he's getting out of this business to have an easy life, so that may not be an option he wishes to proceed with. He could work with the operator to facilitate a payment plan and act the rights to deferral on mortgage payments as well, subject to not having a commercial mortgage or the lender permitting it. Alternatively, he could ask the operator, this is from a landlord perspective, to provide evidence to support that their cash flow cannot afford to pay rent and to work to find a payment plan that is acceptable to both parties. However, you must remember, if the agreement is a legit business-to-business contract, it is not subject to rent deferment that apply to AST agreements. Also, if you agree to vary your rent-to-rent contract, it put in writing. If you don't, you live to regret. Now, I'd like to share with you a case study this week. I assist and manage contracts on behalf of landlords. 3 days ago, we were contracted by an operator who asked for a 3-month holiday from rent payments, as he had 3 properties in his 5-bed property. 2 of those 3 had been made redundant in the last week. We pointed out to the operator, it's a commercial agreement, one to guarantee rent and not an AST. It is not subject to rent deferment as a corporate guaranteed rent and is not by the announcements made by government as it's a business-to-business contract. Also, the landlord's or the operator's payment history had been inconsistent, missing some payments. And in this particular case, the landlord was not entitled to a mortgage deferment. Their request had been declined and the operator's request was declined. The payment was due today and the payment was received today from the operator. So if you're a landlord, it may be worth considering that approach. So what can you do to protect your cash? First thing you must do is become an educator. It's important that you understand your tenant's situation, their employment status, and what they are entitled to. What do they qualify for? Have they been made redundant? If so, they're entitled to housing allowance. The limit on housing allowance has been removed and higher payments can now be made. There is coronavirus universal credit that has been launched? Did they receive a redundancy payment? Can they receive 80% of wages if they've been forlorn? Or are they self-employed? Do they qualify for statutory sick leave? Do they qualify for employment support allowance because their wage has been cut? You must know your tenants' rights in order to help them, because that will help you and it will help your cash flow. So, what questions can you ask your tenants? What are your outgoings? Which of those outgoings are going to continue? Car finance, probably will. Phone bills, probably will. Food will. What expenses are no longer relevant? Socializing, travel, expenses, holidays, all of those they cannot do whilst under containment. What can the tenant afford to pay from their current income from all sources? If there is a redundancy payment, they can probably continue to make payments. If an agreement is agreed to defer some or all rent, how are they going to propose to structure repayments to catch up in the future? Now, looking at the actions that you can take as a landlord, and this is something I did 2 weeks ago. I analysed every one of my tenants. I analysed their jobs and I highlighted risk within my portfolio. I did a cash flow to identify how months I can survive with no income coming in a workplace or on various other scenarios. I identified any bridging loans, mortgages, leases, and I created plans, communicate well in advance to avoid a crisis. Communicate with your creditors. If you've borrowed some money from a private lender, communicate with them early. Avoid adverse credit situations by not paying bills. Utilities have suspended their disconnections for late payments. They are also offering deferrals of payments. Councils have announced that they're offering forbearance. Forgive the language there, that's the council's wording, of 2 months on your council. Rent guarantee insurance, do you have it? You might have it but not realise it. I found out that Aviva, where I have some of my buildings in, and Hamilton Fraser, include in a landlord's building insurance policy a rent guarantee insurance. There's deferral of tax payments, PAYE and VAT to 2021. Assist your cash flow by pushing back your costs, but make sure you have a cash flow to pay. Review your business in detail. You are running a property business. Where do you have cash leaking out? Review mortgages that you're on. Are there any that could be remortgaged onto lower rates? Most times you can remortgage without needing a valuer to come out. And latest update from today, the British Business Bank loans available at 0% interest for 12 months is a quick reminder. There is no employer's national insurance if you've not used your £3,000 annual allowance, which rises to £4,000 in April. Get mortgage payment deferment in writing from your lender so as not to damage your credit record. And the self-employed, as of this afternoon, are entitled to receive up to £2,500 in monthly payments, can continue to trade their business. Now, I've shared with you some of the texts I've been receiving from a number of my banks. At the top, you see the bank confirming that my mortgage rate is dropping to 0.01%. That was on a long-term tracker mortgage to the Bank of England base rate. The middle one confirms that they're making an offer for coronavirus deferment if I wish to do it. And the one received late last night refers to the fact that the bank, and I'm aware of HSBC and Barclays, who are both offering 0% interest on overdrafts. So all of these things can help you and your tenants and your business to survive this time. I thank you very much for today. I'm sorry I have to present this under a lockdown situation, but Ranjan, it's back to you. in the studio.
In the studio, yes. And I must say the signal hasn't been that great from outer space. We definitely need to do something about our broadband there. But the slides were great, and I'm sure when this goes on replay, you guys can replay this the whole thing really, and pause on those slides, some valuable content. Andrew, you mentioned about the rent guarantee insurance. It seems to be a bit patchy as to whether these guys are actually going to pay up or not. Some are trying to wiggle out of it and saying, well, you know, it was never meant for these sort of scenarios. Have you had any insights or into that?
Yeah, good. Absolutely great question. I will be with you. I don't or didn't realize I actually have rent guarantee insurance. The only reason it actually came to my attention, and it was only today, was I've had renewals on my Aviva and my Hamilton Fraser insurances. And these who worked to draw that to my attention that we actually have rent guarantee insurance included as part of the buildings insurance. To the best of my knowledge, conversations I had earlier this week with somebody else who is involved in rent guarantee, what they said with regards to rent guarantees, it should pay out. However, I can't share experience with you there. I can only share anecdotal evidence.
Okay, I think when the government first made the announcement about immunity from evictions for 3 months and things like that, I think there was a general perception among tenants that they were getting basically a holiday. They were being let off for 3 months. I get the feeling from my own communications with our tenants in our portfolio that they have now realized that this is not a freebie, this is a deferment, and as such the situation is getting a bit better. Do you get that same sense where you are, or do you think everyone thinks it's a freebie?
It's an interesting one. It's about analysing customers and deciding how they approach it. I've had some students who have actually paid their rents today, actually early, which is quite pleasant. So the message is...
They don't do that with their coursework.
I don't think they have any coursework at the moment. But I think it really will depend on your clients and your relationships with those tenants. The message that I am putting out to everybody is it's not a holiday. The language being used by government, and I make very clear, the language used is obviously very simple so that people can get the gist of it, but it's misleading language. A holiday implies you don't need to do it. It's a skip. You can skip the payment. It's actually a deferment. And what I'm saying to anybody who has approached with a legitimate reason is I'll run through their income sources and we'll work out a payment plan where we can take the majority of the rent and then an arrangement as to how they will catch the remainder up. So it becomes very clear in their mind, this is no holiday and it's not an automatic right.
It is still, I mean, I guess there is considerable uncertainty for all residential landlords, because some tenants will have told us in advance, and we've received emails every day from tenants saying, have you heard about COVID-19? What can you do to help? But the thing is that we don't know how many tenants are going to leave it till after the rent payment date when we are chasing. And these are just unknowns really for all of us.
Well, I've been proactive. I think if you are reactive to situations, then politely speaking, you might get what you deserve. If you've been proactive and communicated positively with your tenants, and they know the ground rules that you as a business are operating on, then that puts you in a much stronger position. So I would urge anybody listening in that has residential tenants to be proactive and communicate in a polite, informative letter about your particular business stance on it.
I think for me in your presentation, the takeaway that I resonated with was the re-educator. I think that's the key. You've got to figure out what, you may not be a tenant, but you've got to figure out what government measures have been brought in to help tenants. So you've got to know that, hey, they can claim housing benefit or get onto income support, which will guarantee a minimum of 30% of the rent. You've got to know what they can claim so that you can advise them to go and get those options so that they can then pay you your rent.
Absolutely.
And point them in the right direction, isn't it?
Yeah, totally. If you don't direct them, I mean, people are lazy and people just assume they don't have to pay. If you take the effort to research it once, you can disseminate it many times. So you become the teacher of the information.
Okay, absolutely. Andrew, thanks very much. Look forward to seeing you again when you return to Earth from your outer space experience. Right, I'm just going to tee up my slides and share my screen with you guys, because what I'm going to talk to you about, what can you see now? Can you see my screen or not? Just bear with me 1 second. I have just got to kind of, that's it, share. Now people should be able to see my screen. Go into presenter mode. Doesn't seem to be working, that button. Okay, I'm just going to carry on anyway. Yes, that's fine. That's in.
I'll give you a hand signal on this 1 minute.
Brilliant. Now I'm probably going to cut in the middle of my presentation for the applaud the NHS, because that has to happen at 8. We'll sort of get up and participate in that. Okay, commercial property. Many of you know that I do residential property, I do developments, but I, as of late, particularly in the last 10 years, I've been looking to migrate my portfolio to more of a bias towards commercial assets. There are plenty of advantages to commercial property, and I've talked about them in various YouTube videos. But the commercial property scene has been impacted quite a lot by this COVID-19 crisis. And I think many commercial tenants have also been given the most help. The strange thing is that the help has been directed firmly at commercial tenants rather than commercial landlords. I don't think there's any help that's been afforded to commercial landlords, which is going to be a worry for those with cash flow challenges and who don't have enough buffer to just shore up through these next few months. Now, the kind of help that is available to commercial tenants include things like business interruption loans, where they've got 1 year's worth of free loans without having to pay any interest at all. They've got many of the employment issues that Andrew covered, which I won't repeat, but business rates freezing. Business rates are actually frozen, which is a fantastic advantage for those folks. And you've also got grants. You've got cash grants that has been thrown at commercial tenants. And grants are great because they don't have to pay the things back. The other massive hit that came through for commercial property landlords was that the government have effectively put a moratorium on landlords getting their properties back of 3 months. So that effectively, if the tenants do not want to pay for 3 months, they cannot pay for 3 months. Now, that doesn't mean they can get a holiday or get it discounted or a rent-free period. No, it just means that during this next 3 months, you can't do any enforcement action to get your money or get the tenants out. One of the great things about commercial property as opposed to residential property is the enforcement. So if you've got a tenant in a cracking location, in a cracking pitch, and if they don't pay, then pretty much, it doesn't matter who they are, how big they are, you can pretty much get, you can get bailiffs in there and kick off that collection process without having to go to court. and pretty much get your money within 2 weeks. Within 21 days, you can even forfeit the lease and get them out. So commercial property has great advantages in order to sort of exercise your rights on as a landlord. The thing that the government has done, they've put a 3-month reprieve or a hold on landlords exercising that right, which is of course of a little bit of concern. The thing is though, what they haven't done is given landlords a corresponding right to defer their mortgage payments. And this seems exceptionally odd to me. In the buy-to-let arena for residential property, you can defer your mortgage by 3 months. And I put a video out today actually explaining to people, I've reviewed 12 lenders and shown how easy or difficult or straightforward it is, if you like, to actually get them to agree to this. But with commercial property, the government have not asked lenders to give landlords 3 months holiday. So if your tenant doesn't pay, you've still got the mortgage due and you could be stuffed. Now, remember also that commercial mortgages are just not on commercial properties, because some HMO landlords, particularly with larger HMOs, usually 6 or more rooms, 7, 8 rooms type of properties, they will have actually got an HMO commercial mortgage. Sorry, they would have got a commercial mortgage on that property, and that is affected by the same rules. So you can have HMO tenants who are affected by COVID-19 and not paying, but have a commercial mortgage going out and not be able to get a 3-month holiday on it. So it's very much dependent. They've left it purely up to the lender, and some lenders are just not doing it if they don't have to. And that is posing a little bit of a problem. Now, I've put out a video on YouTube, which I know many of you have seen, which is my 5 golden rules for buying property on the high street. And fortunately, I've stuck to these rules, which means that personally, in our commercial property portfolio, we are in a very, very strong position, and I'll explain why. First of all, we've only bought properties where the surrounding footfall, the area that we're buying these retail units in, is affluent. In areas which are desolate, you don't have affluent footfall, you don't have people wanting to set up businesses, so it's very, very difficult. Secondly, we've gone for areas where they are very low vacancy rates. These are places where businesses want to be because there's affluent footfall for them to trade with. Thirdly, we've looked for properties which are right-sized. By right-sized, they're not too deep or on too many floors, and obviously designed for a bygone era when products were sold through the shops, because now they're being sold through Amazon. Our units are nicely sized to deliver services. Unfortunately, during this COVID-19 crisis, well, all our retail units don't provide products because that can be done by Amazon. They all provide services where you need to be in 2-meter proximity of the customer, which is an eventuality which who would have been able to foresee. And this is again part of the right sizing thing. We always go for properties where they are wider as opposed to deep. This allows us to basically, I'm looking for units which are easily configurable for service sector type of businesses, because they seem to have most traction with tenants. The key thing I look for, above all, is asset management potential. I do not buy any retail property unless it has an alternative use. And I'm going to come on to I'm going to come on to say exactly why this one point is my saving grace. And everyone that's followed my teachings will be fine if they've looked for property with alternative uses. Listen, more to come. I'm going to talk about opportunities with commercial property as well, all coming up. But the NHS are doing a great job. They're at the front line of dealing with our crisis. So if I could just stop the share for 1 second and go back to our people. Can you see everybody? Can we all just give these guys a round of applause? Now, before I get back to the talk, I have to say one thing, which I should have told you guys about before. We weren't late in clapping. We actually did it at the right time. YouTube puts a 30-second delay on the feed that you're getting. I think they just want to make sure that, are you on this camera or that one? Oh, you're on this one. Oh, right. So I'll look at that one then. Okay. So YouTube puts a 30-second delay on this feed. So you see this 30 seconds later. I guess that's to make sure we're not doing any sort of terrorism videos or anything like that, or I don't know what sort of nonsense people do. So that's why you probably saw us clapping late. Wonderful job that all these guys are doing. And I mean that most seriously. And I really, I'm glad the Property Investor Show is no longer taking place and that entire Excel Centre is going to be beds for the whole of London, 4,000 of them. This is a serious crisis. We will get through it. It's having effect on us as property investors, having effect on everyone. There are people dying here. But the thing is, going back to commercial property again, let me just share my screen again. The thing with commercial property, there will be deaths, but there'll also be deaths of businesses. Many businesses, or business models, should I say, were at the edge of viability before, and those business models just won't be viable going forward for all sorts of reasons. And I think this is just going to bring forward a trend. If you imagine a trend that may have taken 2-3 years to unfold, it's just all going to happen pretty much overnight in the world of commercial property. Anyway, back to my point about alternative uses. This is the key thing. I never buy a commercial property unless it has alternative uses. Alternative uses to make it alternative commercial uses, or perhaps conversion to residential. And this is what that does for me. What it does for me is, you, Mr. Tenant, you don't pay me rent, or you don't want to be there. That's fine, because by having the place empty, I, as landlord and property owner, am in a better position. Because if I can convert part or some of that space into residential use, then that more than doubles the value per square foot. And when we come out of this, although some aspects of commercial property may take longer to recover, the demand for residential property for sale is still there, and is still there strong. So that's what, and the tenants know this, and which is why they will pay if they know that their landlord has alternative options for that property. If you're letting a commercial unit in a low value area with low footfall, with low affluence, if you like, then there'll be low residential there'll be very low commercial occupier demand for that property, and they have the upper hand in the bargaining in the bargaining game, quite frankly. In an area where I have alternative uses for that property, I have alternative occupiers who may want to walk in, then I have the upper hand in that negotiation game. So in areas of lower demand, some of the bigger tenants are asking for rent-free periods even during this crisis. But in our areas, they are not. Now, we've just had the quarter day. As if you invest in commercial property, you will know that commercial rents are paid every quarter. And I was just looking at the figures from our own portfolio, and we're looking at about 62% of commercial tenants have actually paid their rent this quarter. The rest have basically not. But we'll get it back later on. Now, this is going to shock you. It is the smaller companies and mom and pop traders that have paid up. Because when I rent shops, and I rent them in areas of high demand, and I rent them to mom and pops, I'm letting them usually direct to them as individuals, or if we are letting to them as in a company, they are personally guaranteeing it as well. They know that this is not a holiday. They know that they have got to pay it someday. They also know they're getting all these grants and business rates free periods. So they have paid it up. It is the larger companies who have not. It is the Costas, it is the Corals, it is the Starbucks, it is the Gregs, it is the large companies that you would think are blue chip you would think are great covenants. They're the ones that are representing my element of non-payers, and it's the smaller guys that has paid up. So this really turns around the whole covenant issue on its head. We will get that money. The big companies that are just playing a cash flow game, they won't get any rent-free period from us, because if they do not pay, we'll get back the premises, and there are other alternative uses that we can put them through to, and they will not want to lose those trading pitches in the long run. So that the alternative uses, the rule 5 is basically our saving grace to get these returns. So the opportunity, as I see, is that in 3 months' time, in 4 months' time, there will be many more commercial properties on the market than there are today. We are going to see an acceleration of certain shops close. We will also see landlords with poor cash flow and poor tenant mix, and perhaps just not much fuel in the tank, literally go to the wall and have to actually sell properties quickly. So I see in 3 or 4 months' time a lot more commercial properties coming to the market than we have ever seen in recent years. Now, the other thing we've got is more permitted development opportunities than ever before. We've already got the ability to convert offices to residential, part or full conversion of retail units into residential use. We've got new commercial property rights which are coming in the coming months in terms of adding extra floors to commercial units, and also knocking down in certain cases of commercial properties and building new properties on that site. So we've got more sites coming to the market. We've got more things we can do with them without seeking planning permission. We've also got this thing where, this is my prediction, by the way, I think the residential lending market will bounce back pretty quickly when this COVID-19 crisis is over. And I think commercial lending will take a little longer to bounce back. So that will mean that it's going to be a game for cash buyers. It's going to be a game for those working with private investors. And this is exactly what I did back in 2009. In 2009, after the Lehman's crash, there was a massive credit crunch. It was very, very difficult to get traditional funding for commercial distressed assets. And I purchased all my deals back then with private investors. If you're a private investor, you're looking to work with me in picking up some interesting distressed commercial assets, then just get in touch with me on LinkedIn and whatever, and we can have a conversation, because there's going to be plenty of fun to be had. Now, another thing that's going to be interesting is to think about getting things done, getting deals done using creative financing strategies. Now, every creative financing strategy, vendor financing, lease options, purchase lease options, all of this sort of stuff, it was born in the world of commercial property. It started with commercial property first, and then it was hijacked by the residential property mob, and they tried to make it work with mixed or limited success. But all these creative strategies work a treat in commercial property. When there is limited, and I've seen this in every single recession going, whenever there is limited traditional finance from banks and traditional lenders for an asset class, then the vendors are all ears to listening to vendor financing options and creative financing strategies. Because remember, it's the cash buyer and someone with a creative strategy who is the only buyer in town. And that's when you can have some real fun if you're educated and clued up. So very much for now, it's about steadying the ship, of course. It's about making sure you kind of limit your outgoings, try to get your mortgage lenders to give you a kind of 3-month reprieve on your mortgage payments, whether you need it or not. I've actually approached our commercial banks as well, and most of them actually, they say they're doing it on a case-by-case basis, and they have actually, or they don't have to by the government, they're not forced to by the government, but they have agreed, the ones I've talked to have agreed to give us a 3-month window on our, or holiday, if you like, on our commercial loan repayments. Now, we don't necessarily need that, but what that does is it gives us more firepower to pounce on distressed assets and buying opportunities, which will come to the market over the coming months. And that is the key, to quickly get yourself into the position where you can have some serious fun in the property market. The best deals that I've ever done have been in the aftermath of a game-changing effect. The early 1990s, after 2009 in the credit crunch, and I have, in good times, I've never ever managed to do deals which beat the quality and the profitability of the deals done during the aftermath of a recessionary period. We're going to see that. We're going to now. I think I was talking to John Howard. I'll credit him for this phrase. He used a great phrase, which was "Don't catch a falling knife," and that's a very, very important phrase. And I love that phrase so much. I'll pinch it and use it myself. It's important. I normally say, "Let the dust settle." It's important to let the dust settle a little bit on what's happening right now. So it's not about. I wouldn't recommend go out and buy something immediately. The dust has to settle. You don't want to catch that falling knife. Let the dust settle. The time now is to equip yourself with the knowledge, shore up your existing ship, and educate yourself on how to exploit and capitalize on the opportunities which will unfold over the next coming months, particularly in commercial property. So anyway, that is my take. I hope you enjoyed that. Now, what we're going to do, I'm going to kind of open up the mic for 1 second to our speakers while you guys, the public, if you like, get your questions together. I'm just going to ask the folks on the line, because I asked them a question after their talks, whether they've got anything they wanted to say to me.
Yeah, well, I was looking at it, and your analysis that creative strategies are going to be the thing of the moment, and cash. What do you, if I was a newbie and you've been in the game 30 years, what would you be advising me to do?
Good question. I think I've got a video on YouTube which talks about how to buy commercial property, no money down. And that particular strategy works particularly well when there is no other game in town. What we're going to see is vendors just really stuck for sellers. Commercial properties will stay on the market for a long time. The thing is, I wouldn't buy anything that doesn't meet with my 5 golden rules. I'll put a link on the replay when it comes up to that video there. It's got to have alternative uses. When you actually find a property, the great thing is you can structure a deal with the vendor to basically delay the completion, delay the payment time. So if you're doing a permitted development, for example, if it's a permitted development conversion opportunity, then secure it with an option or a contract to exchange without necessarily with a delayed completion point. That gives you time to get investors and JV partners on board. The biggest thing with JV partners is a JV partner is always interested if the deal is good, if the deal is sound. If you find a cracking distressed asset, there are plenty of people that will partner with you. So for new people looking at commercial property in particular, you need to be educated a little bit about the various strategies that are available. The best skill you need to develop is how to find the deal in the first place. If you find the deal in the first place, which is a distressed asset, then you will. It's relatively easy to find someone to back you. I've never had a problem getting backing for a great deal. Now, and this will come. The other thing that will happen over the coming months is, I think David Sandeman touched on this, is whether we're going to see auctions. It's going to take a long time for auctions to come back. If people can't do viewings, if auctioneers can't go and value properties and take properties on. I don't exactly know how that process is going to happen. So the direct to vendor type approach, contacting vendors directly, is going to be a fantastic strategy, which is going to open up and come into play again.
Ranjan,
Yes.
Ranjan, would you say that one of the best things to do to start with is ask the owner of the shop or whatever how much they owe the bank? Because if they owe the bank too much money, there is absolutely no point in trying to negotiate a deal, because you'll never get it for the right money, unless the bank forecloses.
I absolutely agree. And one of the tools I use is land registry searches. It costs you £3 to pop.
Yeah, good idea.
It will tell you whether there's a charge on the property. Now, it doesn't say how much the loan is, but I find you can infer a lot from the date of the charge. So if lender X has a charge on the property registered in last year, then you know that it's been valued last year. If it's 2002, then it's an old loan and it's an old value, and there's probably something to play
You could
with.
just ask them, of course.
You could ask them, but I think
I do. I just ask them.
You would ask them.
I'm wasting my time. How much do you owe? How much do you owe on it? I just ask them.
But wouldn't you check?
You know, sorry?
Would you not check as well? I mean, you check as well, wouldn't you?
Well, maybe. I see what the answer is first.
I mean,
if it's too much money, there's no point.
No, that's true. I mean, with direct to vendor, what I tend to do is I have my target areas that I'm looking at, and it is a letter writing campaign direct to the owner, and that's usually based on land register search and having that sort of information as well. And that's going to be This is going to be a fantastic time for that, quite frankly. If you're contacting, simple things like betting shops are stuffed. Estate agents are stuffed. Those two
just calm down about estate agents. I've got fine at those. We're not stuffed. We might put everything on hold for a few months, but we're going to be back with a vengeance. Okay. I'm just hoping some of my competitors won't be.
Well, listen, well-run estate agents, of course, will be okay. But there are many that don't have entrepreneurs like yourselves at the helm. My point is, betting shops and estate agents are A2 usage. A2 usage shops are eligible for the PD right to make a flat pack. So if you've got these long, deep A2 shops, what you will find is the landlords of those shops are going to start getting jittery. So they're the ones to write to, because many of those shops are owned by private individual landlords, not big corporations, and they will be getting jittery about the high street situation, about whether the tenants are going to stay there long, whether they're going to renew their lease, and they'd want to be out. And there's everything creative to play for there as well.
Very good.
I've got a question for you.
Yes.
You said at the beginning you buy up to half your properties from auction. I was wondering why that is, what you like about the auctions for doing that, and what sort of specific strategies you use when you're working within what is really a sort of 15-day time frame of the catalogue being released to the property coming under the hammer.
Yes. I think, I buy mostly commercial properties. So what I'm looking at is what alternative use I can put them to. So the reason you win at auction is because you pay more money than anyone else in the room. So that can mean that you're a mug. But I'm not a mug. What I do is I have a plan of what I'm going to do with the plan. And I'm confident that my plan is better than most others in the room, because I've educated myself on all the permitted development opportunities and all the things I could do with the shop or the premises without having to go through the complexities of planning permission. And I'm amazed that when I go to auctions, people don't know this stuff. People are just looking at these premises in very simple terms. I mean, everyone knows you can convert offices to residential use and all of that, but there are plenty of other PD rights that people don't know, and they don't know how different PD rights work together and how you can choose which PD right to use on a particular site. If you know all of this, I picked up properties simply because I've spotted something, I've spotted an angle which wasn't entirely obvious. That's the beauty of commercial property. If I look at a 3-bed semi, everyone in the room has watched Sarah Beanie, has watched Homes Under the Hammer, and they know what you can do with a 3-bedroom semi. You look at a stinky, rotten shop, it's not entirely obvious from looking at it what you can do with it, because it's all in the detail, it's all in the previous usage, it's all in the PD.
The other thing, Ranjan, is of course they can fund a 3-bedroom semi very easily.
Yes.
Which is, the funding on commercial is hard. It's difficult, isn't it?
Yes. I do it with private investors. I do it with own funds. And I do it with facilities that I've got with the bank. As I mentioned, quick little ad again, in all times like this, I work with private investors to finance the purchase of distressed assets. Get in touch if you want to get involved in the stuff that we'll be doing over the coming months.
And Ranjan, do you find there's enough information about the property, the commercial property, on the website, if you like, for you to start working out what your PD options are? Or do you find you're obviously going to go and view it if you're going to bid, but can you get a pretty good idea from the catalogue, or is a viewing necessary?
I am very happy that the catalogue does not contain full information.
Spot on.
Because yes, you've got to get off your ass and go and see properties. And I think a lot of people expect everything to be done as a click. But I have gone and I know people buy just based on catalogue information and on Google Street Review and all of this. But I have picked up properties time and time again because I've gone to the site and I've seen something that wasn't in the catalogue.
Spot on.
The classic, for example, we bought a bank building in Stoke Newington. The auctioneer measured the floor space based on the valuation office measurements. Now, the bank had a vault in the basement, which had natural light. The vault space was as big as a 2-bedroom flat. Vault space is not valued for business rates. So it wasn't that floor area, that whole floor area, which was about 700 square foot, wasn't listed in the auction catalogue. If I didn't go and see it, and by the way, it's a lot of hassle to go and see a bank branch for sale because you have to take your ID along, you have to verify yourself in advance. People turned up on the viewing, and because they didn't turn up with their ID, they were standing outside. So there were only 3 people on this viewing that I saw, this place in Stoke Newington. And they were the only 3 people privy to the fact that there was information on the site that wasn't in the catalogue. And this happens time and time again.
Amazing. Ranjan, I bought a parade of shops at auction once. And when I got there, I had some extra keys. I didn't realise I bought the building next door as well. So I got an extra free building. I got a shop and 3 flats, which I didn't know I was getting. So, sometimes you can just get lucky. But the most important thing is always at auction to go and view the property. Never buy a property without viewing it, and never buy a property if you haven't got the funds to complete it.
Yes.
Can I add to that, Ranjan, is never buy a property without reading the legal pack, especially the special conditions of sale.
Yes.
We're seeing an increase at the moment in specials coming through where the vendor's sneaking in up to £14,000 worth of extra fees, contribution to his kitty cat fund or something. And they don't even say 14,000 with a pound sign. It's written in the outlong 14 spelt out £1,000. And people are skim reading, looking for a pound sign. There's never good news in specials, so they don't put that in. You really must check those specials for that purpose.
It's very important. So important.
That is a good point. And a lot of the time they put it as a percentage as well. The contribution to costs and stuff. You've got to add that back in.
And also, any rent arrears. Rent arrears are the big one as well, because you have to pay their rent arrears. And get it back. Try and get it back afterwards.
And of course, realise that the guide price that you see in the catalogues is only an indication where the reserve is. It is not a valuation. No. And so many people think, well, it's got a guide price, say 80,000. Oh, I'll go up to 88 or something, and it sells for 140. If they'd only looked at what's happening in the past, they would have seen properties in the street are selling for 140, not 88. And a lot of people have been sucked in because they don't read the definition of a guide price. It's only where the reserve is set or within 10%. Not what the auctioneer expects to sell it for.
No.
Yes. Okay. Now, loads of comments coming in. John, people like your never catch a falling knife.
Good. I'm glad I've helped.
I criticised your your shirt, but there was
Yes.
someone asking you to take it off, actually.
Well, that's they certainly don't want me to do that. I can tell you that now. They'll be very disappointed, Ranjan. Very disappointed.
Fantastic webinar and all of that. So that's great. A few comments about my jokes, which is nice. I'm glad to know that they're reasonably well appreciated. You got to get better audio from your spaceship, Andrew. I think it's your broadband connection there.
I think it was the streaming of very large graphic files over the web at the same time with audio, and going via Zoom and then YouTube and so forth, hopping on. So I think it was bandwidth, yes, and graphics. Sorry.
Yes. Now, there is a lot of stuff people are asking about lending. I think we touched on this. Lending is going to grind to a halt. HSBC announced that they have suspended lending on certain types of loans. At first, they pulled the loan to values back, but many RICS surveying firms have said they're not going to go out to properties to do the valuation.
No, they're not going out over 60%. And also, they also start a caveat in their valuation. If they have a caveat about the virus and what it might do. Yeah.
Yes.
Already.
I mean, a lot of people are asking me about PD rights and stuff like that. I am going to talk about that later on my YouTube. If you want to find out more about the commercial property opportunities coming, if you're not already subscribed, you've got to subscribe. Join the 14,000 subscribers to our YouTube channel. Hit the bell icon. You'll be notified as soon as we upload. I'm putting regular videos out during this Corona crisis as well. A lot of comments about the NHS. That's brilliant. I'm really, I just can't believe the work that they're doing. It's so tough.
Amazing work.
Shocked that they don't have the some of the gear that they need and all this sort of stuff. That's not very good. Right, let me just find someone's
While you're finding the
comments.
next
Go on.
question, if I can just chip in, based on my experience working at a bank many years ago, the banks have stopped lending because they've redeployed their resources to actually be able to deal with the inbound calls for the 3-month payment deferrals and the systems they're having to set up. If you try and phone a bank at the moment, the call queues are massive. So they're redeploying staff from teams that write new business or remortgage business into the helpline teams. Once that dies down again, they will start to transition the staff back and the mortgage books will open. At the moment, the reason they've said 60% loan to values is to put people off the market, coming into the market, and restrict so they can cherry pick the business.
Yeah.
Yes, absolutely. A couple of comments I've generally had about what help there is for landlords. I think we're falling between nets here. We're not really self-employed. We're not really working. Fundamentally, we're seen as running investment businesses, which is the problem. The saving grace, I think, and I'm not sure, but I believe it will be the case, is if you have structured your business, because on many of the seminars that I've run before about structuring businesses, I've always recommended people adopt a PropCo-OpCo structure, where you have an operating management company responsible, which is basically a trading business, which manages the properties, employs the staff, and works as a trading business. So in our case, that's Fablets. But Fablets doesn't own any properties. The properties are owned by special purpose vehicles which own the underlying assets, and give those, the SPVs give the properties to manage to Fablets. So if you've structured in that way, and Fablets is VAT registered, business premises, all the rest of it, it should be able to avail the all the help that's afforded to trading businesses, which probably is a benefit of that sort of structure. John, do you have any input on that?
Yeah, I do. I mean, you're absolutely right. And of course, a trading company, when it comes to death duties, it's not taken into account. So that's very important that you're a trading company, not an investment company.
Yes.
So when it comes to, passing it on to your relatives and so on, it's very important that you have a trading company. If you can prove it's a trading company, it doesn't come under the same tax.
Yes, yes, yes. Now, I should say, can we put the Instagram graphic up? Now, I should say, I mean, next month's Baker Street is going to be another live stream. I don't think we're going to be back in the room that soon. What we're going to do for next time is do a lot more polls and a lot more interaction in a more better way than we can do over YouTube. We're going to use Instagram. So what I want you guys to do is, if you haven't already done so, follow us on Instagram, because we're going to poll you guys and get a lot more interaction using the Instagram platform. So get your phones out, do it now, and sign up for us in Instagram. I'll leave that graphic up there for you during this this stream. Okay, so is anyone brave enough to buy property over the next month? Are there any circumstances you can think of that you'd actually buy something?
I would give it a go if the price was really, really right, because my gut feeling, and talking to everyone I said earlier that I respect in the business, is that residentially this could come back quite quickly and relatively well, depending on how many people lose their jobs. So residentially, I might take a view. Commercially, which is more your side of things, Ranjan, although I have got a number of commercial buildings that we're trying to get tenants for at the moment, which isn't clever, would be a different challenge altogether.
Okay. I've got a...
I think it comes...
Go on.
I think it comes down to the deal. If the price is right and the terms are right, because now is a time when you, as the buyer, can dictate both the price and the terms.
Yes.
And if you structure that transaction correctly, you could probably pay for it in installments and agree a particularly low price, just take away the immediate pain that the vendor has.
Yes. It's
all a bit messy though, isn't it, Ranjan? It's all a bit messy. Just buy the damn thing and get on with the deal, Get it even cheaper by buying it now.
Yes.
Not over 2 years, or funding these things is so difficult with the banks. If you're trying to, depending on how much these people owe on it, I know some people have to do it that way, and you're the master of teaching them to do that, Ranjan. I understand that, but sometimes simple is best.
Listen, I'm fully with you. I think I think the market is going to bounce back very, very quickly when this is over. When the election was won, we saw a massive Boris bounce and all the rest of it. The fundamentals are great. We're all itching to get on with this, really. So when it's over, it's going to bounce back quickly. And I think there is an element of missing the boat. I don't think there's any imperative to act in the next couple of weeks, but really it's dependent on your position. I mean, I'm personally looking to shore up my position, particularly within the next 10 days. So I have certainty, if you like, or where I have uncertainty, I can manage that uncertainty. Only when I'm in that position will I then be looking at opportunities. And as soon as you can get into that position, you can then look for opportunity.
Absolutely. The one thing, Ranjan, I would say is, all the way through any recession in the past, when people have said to me, "Oh, I suppose you're not buying at the moment," I've always said I am. Even if I didn't have the money, I'm always buying. I'm always looking. If the deal is good enough, like you said earlier, Ranjan, if the deal is good enough, someone will help you fund it. Someone will do it with you. You're always in the market. You're always available. If you really think the market is bad and you can get it very, very cheap, just buy and sell it immediately. Make a profit. Turn it over. Make some money. But you're always available to buy. Always.
You're right, and I think you've expressed a couple of very good points, because the thing in times like this is that the regular market doesn't quite work fast enough for people who are in distress.
Absolutely.
who are in distress themselves or have distressed properties. The regular market, the auctions market, the commercial agent market or residential agent won't be as fast, as efficient as it usually is. And one of the main reasons for that is that traditional financing is going to take longer to come back.
It is. But
That is gonna
Ranjan,
create
don't
the
you think
opportunity.
it's got too easy? I mean, people are using bridging loans like a bank, and they shouldn't be. A bridging loan was always for very, very short term. You knew how long you got it for, 3 months, 4 months. That was it. Now people are using them like a bank. They're not a bank. They're far too expensive. You try making any money when you're paying 14, 12, 14, 18, 20% interest. You can't do it. It's too hard.
Yes. And it is a lot more challenging when every man and their dog are in it, because they are not necessarily looking at it and carrying out the same due diligence, the same risk analysis, and they're not always looking for the same minimum profit margin. They're not estimating the costs right. So it's very hard to compete with people that really don't know how to assess a deal properly.
Absolutely.
At times like this, what you have is the hard-nosed guys. The Homes Under the Hammer fans will be sitting there watching telly. They were not going to be out there doing deals.
No.
So it is a different type of investor, entrepreneur that will be out there in these challenging times. You know, everyone, if you look at people like Donald Trump, he paid a pittance for Trump Tower in the early 1990s. There's a story of NCP car parks that was turned into an £800 million empire, someone buying distressed bomb sites after the Second World War. You know, there are just so many examples of people buying distressed assets after a time.
Timing is everything.
Timing is absolutely everything. Yes. And that's what it's going to be like this time round. And going back to the newbie question, newbies will need knowledge, they will need to get educated, but the key thing they can bring to the party is the deal. If they have the deal, they've got everything, because you will
absolutely
do it with, particularly in this stage of the internet, where it's so easy to connect with people like it never was before. Okay, let me just see what questions. You talked a little bit about rent to rent, Andrew. I'm getting a few things about rent to rents, but do you see a case where basically rent to rent operators, particularly if they're doing rent to rent serviced accommodation, are just going to hand back the keys? They can only take this. It's one thing if you own the asset, because you can ride things through a little bit. But if you don't own the asset and you've got 1 year left on a rent to rent contract, what's the point?
Why bother?
There is a very strong probability that a lot of operators will either hand back the keys or default on payments. Although it's called guaranteed rent, where's the guarantee actually coming from? The guarantee is coming from the covenant that they give you. Are they putting their house online in the agreement? I don't see anybody put a personal guarantee up when they do a guaranteed rent agreement. It's a commercial agreement, and I think it's going to bite a lot of people on the bum if they've not been careful who they've done it with and the nature of the agreement.
Okay.
I agree.
And David, have you seen any, are you aware of what's going to happen? I mean, I know the auctions next week are pretty much going ahead because all those properties have been listed in the catalogue at a time when the auctioneers could go around and value them and all of that. Have you heard any murmurings of what's going to happen to the auction timetable, being as auctioneers cannot take on listings? Or are they going to find a way around it?
It is difficult, and what a lot of auctioneers were busy doing sort of last week was running around with iPhones, taking internal shots of the properties in place of the viewings which are coming up. So that gives you an indication what the property's like. It's no substitute though for a
no.
I mean, Matterport is pretty good, but their budget doesn't generally run to that. I think they're waiting to see what's going to happen. But the reality is, guidance coming out. I've just seen flash in. There's guidance coming out from the government as to what agents can and can't do. And whilst smaller operators might not go along with the rules, the larger corporate people are going to have to follow the rules because
Definitely.
they've got responsibilities to their staff.
Yeah.
So,
Yes. That's no, that's
I've got a couple of things left. I've got a couple of properties in auction next week or the week after in auction house. So we'll see how they go. I'm going to be very careful about the reserves. Once a piece of land that I bought in 1998. Why I bought it, I don't know. I paid 35,000 for it, thinking I was going to get planning on it. Roll on to 2020, I'm selling it with a covenant, to be fair.
So, John, now you've talked a little bit about your wine rack development.
Yes.
I know that's on sale and all the rest of it, and you've done well selling a lot of units. You mentioned in your presentation a very valid point that if you choose to rent those out, then you can't sell them on with help to buy scheme.
Absolutely, yeah.
Again. So what are you doing to mitigate the risk of basically having a delayed sale on the remaining units over the coming weeks?
Well, we're pretty relaxed about it, to be fair. We believe that we've still got a lot of interest in them. We've got a lot of sales still going forward on them, which is, of course, they're empty. So, you know, people can move in. That's fine. So we've got a lot of interest, and I think as long as this doesn't go on too long, we're pretty confident that we'll sell the stock we've got. Obviously, we borrow the money from the government, which does help, makes me a bit more relaxed, as you can imagine.
Mm-hmm.
So we're fairly confident. I'm less confident about the commercial we've got with it, obviously, which is empty. But certainly from the residential point of view, I'm pretty confident we'll get the price we want going forward.
Yes. Okay. And I've been asked to stand up. You're going to see that I lied. I am wearing trousers.
So many people are going to be disappointed, Ranjan, when you get that. So many people.
Or have nothing to laugh at.
Oh dear. Yes, no, lots of comments. I mean, the thing is, I'm finding it really hard scrolling through these comments because so many of these comments are just people do what they do at networking events, laughing, joking, bit of banter, which is always it's always very, 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 very good. I'm just trying to make sure I cover people's questions.
Well, something that I thought was quite interesting. Addressed to sort of the panel, I've drawn my own parallels on how the situation we're in now relates to 2008 and the market and the cycle. What do you think, David and John? To how this compares?
Shall I go first?
Yes,
please, John. Go for it.
Okay. Well, first of all, Andrew, I realised you're a very nice guy, but you are a complete and utter number cruncher, which every business needs.
Is that an insult?
I'm not into crying that at all. And you've got the whole package because you're a developer, investor, and a number cruncher. Normally, a number cruncher hasn't got the whole package. You have, which is very interesting and gives you a huge advantage over the rest of us, by the way, who need a number cruncher. So that's fantastic. What was the question again?
What parallels are there between now and 2008?
I think residentially, currently, very little currently. That may change. I mean, if we ended up in a depression, for instance, which, you know, some people are saying might happen, or a lot of people lose their jobs, that's different. But at the moment, I think you've got the support of the government more than ever. You've got the support of the public more than ever. And you also got to consider the time of year, Andrew. This is the time of year, traditionally, people go out and want to move home. And I think they're being put off that at the moment. All the big portals, the property portals, are full of people looking at property. Now, you could call it property porn, but some of those, even if you do that, Andrew, some of those people are going to say, look, why don't we get on and move? So I honestly believe there was a bit of a pent-up demand. However, if it went on for too long, that would obviously slide.
Yeah.
Yes.
Great answer. David,
I think, go on.
Well, I think there's no similarities. I mean, it's very clear. 2008 was caused by bankers flogging worthless mortgages for fortune and borrowing loads of money against it and putting a load of that in their pockets on the way. This is purely the lights have gone out. because there's a virus running around the world. If it's, and I think we as a nation and a world will be able to cope with this for a few months, and then get back to normal and wonder what it was all about. There is going to be some pain, but the underlying structure, the banks weren't in trouble 4 weeks ago. In fact, everything was looking rosy, nor was the government. And if the virus stopped tomorrow, then everything would be back to normal in a few weeks. It's going to go on. How long, I don't know. As long as it doesn't go on too long, for months and months and months, get back to where we were very, very quickly, I think.
Yeah. I think it'll get back very quickly, but I'd like to leave a thought with some people. And I'll tell you what galvanized me into action when the last credit crunch hit in 2009. I was scared. I was scared because when I heard the word quantitative easing, to me, it meant they're making more money. If they make more money, then every pound I've got in my pocket is worth less.
Yes.
There are a couple of ways out of this crisis. They can either say to us all, hey, we'll tax you loads, and because we need the money but they couldn't tax us fast enough. But what they can do is print more money, which effectively is the same thing, because it robs us of the value of the money we've got in our existing account. So if you have any money, you owe it to yourselves to buy something that can't be inflated out of existence. That is the big challenge right now, as I see, because the money they've printed is more than they printed in 2009, much, much more. And if you want to protect that real value, the only way I know of doing it, the only way I'm skilled up in protecting that asset base, is to go out and seek distressed assets from distressed vendors, and ones that you can add significant value to in a short space of time. Park the cash in there, and then let that be your hedge against the inflationary risk of your money getting devalued. And that's the big reason why for people.
I think the other thing, Ranjan, is because a lot of people will have lost money on the stock market. They will lose confidence in the stock market, a lot of them, and I think they will take their money out and put it into property as well. And that always tends to happen when the stock market drops like it has done. Okay, there's some very clever people who are going to make millions over the next few months. We know that. But I've always been dreadful at shares. Every time I buy a share, they go down. So you never want me to buy any shares, Ranjan, I'm telling you now.
Same thing with me. I mean, there's another stat I'd like to share with people. Is there was a report came out from Savills Research around about Easter time, and what they said was that the best period to have bought property in the last 40 years was in high value areas between 2009 and between 2013.
Absolutely.
That's exactly what I did. And that's exactly what I'm going to do again, because the formula works. It's tried and tested. Because Ranjan, there is going to be an inflationary boom.
Absolutely, I've made more money coming out of a recession 3 times than I have done in any hot market. In a hot market, I'm not much use, to be honest with you. But put me in a market where you're coming out of a recession, that's where I score.
So we're going to have some fun on Property Elevator, aren't we, John?
We're going to have some fantastic fun on Property Elevator. It's going to be wonderful. People are going to bring the deals to us. It's great. We have to sit there and just say yes or no.
So do you want to tell people? Tell people we've just filmed the promos for the second series of this show? Do you want to tell people a little bit about this show that will go out on Sky TV?
It's a show that I came up with the idea with last year, and Property TV very kindly supported it. And it's similar to Dragon's Den, although we shouldn't really say that, I suppose.
It's better, isn't it?
Well, it's similar, but we're angels, not dragons. And obviously we invest a lot more money than Dragon's Den do. Dragon's Den might put in 50, 30, 60, 100,000. We're talking about putting $1 million into a deal, 1.5 million maybe, 100,000, whatever. And then we share the profit with the person that's brought the deal to us. And if there's you and I both want to buy the deal, then the person decides who he wants to or she wants to work with. So let's hope it's me.
So we were due to do some filming in April, but I think that's
Yeah.
probably going to be delayed now once things
Yeah, it's going to be
get
delayed
back
until
on.
we
But
know where
it's a
we're
cracking
going.
show.
But there's going to be a website ready to go soon, so people can get involved and all the rest of it.
Yeah, and we'll be publicising that if you want to get involved in the show. I mean, John and I are two of the angels. There are another three folks. There are five of us together.
Yeah, but we're the best two. We're the best two on it.
Well, yeah. Well, I think so. Well,
although
I would
Helen's
like to
very
think
nice.
so.
Helen's very nice.
They're all great. I mean, there's a real high caliber of.
It's going to be It's going to be competitive, Ranjan. Remember.
Well, I see you as
competition.
I see you as the Simon Cowell on the show.
I take that as a compliment.
So that should be.
I do know Ranjan is very competitive, because Ranjan sat there and went, "I've got to up my game. You're knocking me out the park with that slide presentation."
Oh, the slides are superb, Andrew.
At least you both had one.
Very, very good. Okay, listen, thank you guys. It's been absolutely fantastic. I hope this live stream has worked well for you guys. It's our first attempt at a live stream. We will get better at it. It's our first attempt. Please leave your comments and tell us how you feel you did. This is going to go on replay as well. We are going to be back again next month. I can't for the life of me remember when the next month's meeting. It will flash up on the screen in replay. We expect that to be a live stream again. We've had more than 1,000 people on this Baker Street property meet. Thank you very, very much for joining us. Remember, on our YouTube channel, my aim is to just keep you up to date with what's happening in the world of property, and to keep you up to date with information that's real. It's not waffle, it's not hype. It tells it as it is. And I want to keep you updated with how property investors will be affected by the coronavirus crisis, and we'll continue to do that. But I also want to keep you up to date with how to tap into the opportunities that are going to unfold. And, there's a lot on YouTube, I know, and I think there are a lot of people flogging dead horse strategies that may have worked a couple of years ago that simply won't work. I mean, I don't know, it doesn't matter how much energy you have, standing up and down and saying, hey, do rent-to-rent serviced accommodation as we come out the boom. It ain't going to happen. Deal packaging, it ain't going to happen. It simply won't work when financing is restricted. So we'll be keeping it real with proper strategies that are actually proven, that we're actually doing in the current marketplace, and sharing that with you guys so that you can tap into that knowledge and get out there and have some fun in the world of property. Property is fun. I echo John's sentiment. I mean, this is a very sad time health-wise, and with this, there are a lot of unknowns with this virus and all the rest of it. But I'm very confident with the way the government has handled things. I think I'm pissed off with the way they've ignored us as landlords, and we've just fallen through all the cracks. Really, no one gives a toss about us as a community, and I think that's been shown. But in terms of dealing with this COVID-19 crisis, I think they have. And there is a lot of bad news out there in the media, but I've also, I think it's best to just turn that off, read the government announcements, turn that off, because you can get too bogged down with that. The folks on Sky News, the folks on BBC News, basically they want you to sit at home and watch TV, and they watch them, basically. If you're doing something else or doing something more positive, then you're not watching them. And that seems to be what's going on here. There are lots of green shoots that I'm seeing about this COVID-19 and how we are turning the corner. If we did nothing, yes, it's a disaster for the nation. But Britain is a rich country. The government are switched on. They've got some very switched on people there and advisors and all the rest of it. And every day they're making some changes. I mean, NEC, Exhibition Centre, Excel Centre, all going to be hospitals for thousands of people. They're getting these Dyson to make ventilators at record speed. They're getting vaccines, not vaccines, but the treatment kits coming in. Yeah. And we seem to have an ability to just get things done and get things done quickly. And I have a little bit of faith in that. And that's why I think we're going to turn the corner. So the opportunity for us, I feel, is to make sure we are there when the dust has settled to capitalize on the opportunity as property entrepreneurs. Any closing remarks from you guys?
Well,
Thank you very much, Ranjan. It's been wonderful. And remember, never catch a falling knife.
Yes, people love that phrase. I loved it so much, I'm going to nick it.
Thanks very much for nicking it.
Great evening, Ranjan. Thanks for organising and inviting me on.
Thank you, David.
We all as a nation have to follow the government guidelines so we can get through this as quickly as possible. You know, the isolation.
So.
Yes, and as soon as you've watched this,
every single person in this country.
And as soon as you've watched this YouTube live stream, go and wash your hands.
And all I can close with is, everybody, please stay safe. For government advice, I wish you and your families well, and I hope come to the other side with a positive cash flow that we can trade from.
Well, it's okay for you, Andrew. You're in outer space. You're not going to catch a virus up there.
Exactly, Star Trek.
Just beam me up sometime. Yes. Okay. Okay, guys. Until next time, keep safe, keep investing, keep learning. Use this downtime to learn and equip yourself with the knowledge so that you're ahead of the curve as we get out of it. And if you follow my YouTube, you'll be joining me on that ride and some of the stuff that we're doing too. That's it for now. We've more or less ended on time. Thank you, and thank you to all you guys at home. Well done.
Thank you, Ranjan, and thank the NHS as well.
Yes, of course. Thank you.